What do all these moves tell us about where we are in the markets right now? Tim.
It tells us that the market is not only responding to momentum, but following the leadership of mega cap tech stocks, who obviously from a mathematical perspective pull the indices up. But I thought today was interesting because I think we have a lot of breadth out there, too. I mean, if you look at what's going on, small caps are up over 1%, so they actually outperformed today. If you look at cost industrials, which have been performing all year, all we do seem to do is talk about banks. We have earnings coming up now next week, and I think we're getting upon an earnings season. The fascinating part about this is Q1 earnings was really almost a pass. It was a pass on uncertainty. Now, we still may have a lot of that uncertainty, and maybe this is a market that right now is inclined to do that. But I like markets here. I like them in the absence of what has been some rockiness. We've got a VIX sub 15, which could change very quickly depending on Washington. But in the absence of kind of status quo right now, markets want to go higher.
Yeah. VIX sub 16, you mean?
Sub 16. What did I say?
16.
Yeah. Oh, I thought it was 15. My bad.
I might have. And that, it might be tomorrow then.
It's low, and it came down.
It's low.
It is low. And I think this, to me, is starting to get a little bit frothy again, right? I mean, so the $4 trillion thing, that's kind of a, we love round numbers, and any kind of time we could use any of the graphics with sort of the Roger Bannister of
Wow.
If you're a sports trivia person, the $4 trillion mark probably will be broken again.
There it is.
So that's all nice. I do think the market sort of got another charge when the Fed had a little bit of opening of that. Maybe there are some rate cuts there. And I'm sort of coming around to that they should be cutting.
All right.
And I think that is what's driving a lot of this. And if we are going to see the Fed cutting rates this year, which a lot of people are expecting at this point, and you're seeing growth is actually continuing to be strong. A lot of people thought growth was going to fall off a cliff. It's not. You're starting to see inflation coming down. That's a really good thing for the markets, and it's a really good setup here for the second half of the year. And there's still a lot of cash on the sidelines, right? And if you're going to see those shorter-term rates come down, a lot of that money can make its way back in. And that's where you're seeing a lot of these retail investors are rushing into these like riskier areas of the markets. They're going into your Bitcoins. They're going into things like your Nvidias, these things that maybe are getting expensive and maybe frothy to your point. But I don't know if the FOMO trade is done there yet. But, what you should be doing is broadening out, to Tim's point. But I don't know if these trades are actually over at this point.
The obvious is risk on. And the not so obvious is that this was the biggest canary in the coal mine for tariffs and trade. So did they ring the bell for the all clear? Months ago, weeks ago? It looks like they did. I mean, look at the one that's in the target zone. 12.5% of sales from China. $4.5 billion write down. And the stock off to the races. I still wouldn't buy it. Here's the problem. Customer concentration. And all of those customers are looking for other ways to develop their own chips. That didn't hurt NVIDIA to go from 90 up to where it is now. But I cannot buy it now. Frothy, Karen said. I think the point, if Karen, I shouldn't say that. You're a value girl, so you have a different opinion of frothy. I just think that what makes NVIDIA a winner in the AI space is going to be chipped away at.